American Airlines has the industry's highest debt at $34 billion, some $10 billion more than at Delta Air Lines or United Airlines. That prompted market speculation about its future. Then the CEO of Boeing said a major U.S. airline would most likely go out of business. American Airlines will have none of this. American is not going away, CFO Derek Kerr says. You can take that one off the list. Kerr concedes American needs to boost its standing with investors. Whereas Delta and United are raising cash mostly from the open market, American is prioritizing a $4.75 billion CARES Act government loan. There is some uncertainty out there that we won't get this done, Kerr told the Wolfe Global Transportation Conference about the government loan. We don't believe that. It's important for us to provide the confidence to the street. American expects to finalize the loan by the end of June, bringing cash to $11 billion. Less of that will be spent as American ramps up cost-saving initiatives and receives a rebound in bookings. American aims to decrease daily cash burn from $70 million to $50 million by the end of June. Delta is having some days of positive net sales as new bookings outstrip refunds, CFO Paul Jacobson told Wolfe. Kerr projects American to be profitable next year and immediately address its debt pile. All of the excess cash will go to debt repayments, everything will go to that over the next 5 years, Kerr says. Loans may not reflect cash spent if airlines are raising more than they need. Kerr says American wants to get liquidity as high as we can while there's uncertainty. Delta quickly raised over $10 billion in 3 months so it could shift management bandwidth from finance to strategy. That's really bought us a nice bit of time, Jacobson says. If at the end of the day we end up raising more cash than we need, we have a lot of flexibility to be able to pay down that debt with cash. American had the highest debt amongst peers even before COVID-19. While it was criticized for share buybacks, American argued debt was higher because it refleeted earlier than Delta and United. Government loans, separate from the CARES Act payroll grants, can act as a benchmark for future deals. The terms are there, the rate, the LIBOR plus 350 is there, Kerr says. It's the most efficient financing that's out there today. American would follow that up with financing its peers have already done, including secured debt, a secondary offering or pre-selling advantage frequent flyer miles, Kerr says. We have other opportunities that we could do today that I think become better after the government loan gets done. Delta in comparison is less eager for a government loan, which it applied for to hold our place in line, Jacobson says. We have until September to make a decision about that as well as other financing source, should we need them. American is pressing on with the loan, which Kerr calls its #1 priority. It might be a little different than what others are doing, but I believe that's the right track for us.